Doesn't it sound so good when you can earn a profit without investing your own funds and bearing almost a negligible risk? It sounds good, yes. And you must be thinking that if it is possible, then the answer to your question is yes, it is possible. So all the exposure that you can get to an international market in buying and selling of the foreign currency would be learned today, this lecture. Welcome to Study On. This is Samia Aziz, and you are here with me to learn about triangular arbitrage. Let's begin this lecture. As earlier described in my slides and the video, that there are three types of arbitrage that an arbitrager can gain. The first is locational arbitrage, the second is triangular arbitrage, and third is covered interest arbitrage. We learned about locational arbitrage in a previous video, and today we will be learning to a next level arbitrage, which is called as the triangular arbitrage. But before moving to my main topic, I would like to present a warm-up session about locational arbitrage in which you will be recalling what I explained and you will be connected to the new topic through the warm-up session. So let's get started. As I described in earlier slides about locational arbitrage, that it doesn't need your capital, it doesn't need your funds to be involved. It's so simple, and it has one market, it has just one currency, and that you convert your currency into another, that is a single currency. So, and other thing is that it is possible because of the discrepancy, because the differences are existing between the bank's code. The banks have put the code, they are different, that's why you can locationally arbitrage. And this can be due to many other reasons, like bank's reason, the market reasons. Market reasons can drive the values, differences, and they either can be undervalued or overvalued, but these differences are the reason of earning profit that you can earn. But the bad thing about it is that it is not going to stay forever. There is a risk involved just for the time being. Like if you are not capitalizing quickly within a shorter period of time, then definitely the arbitrage will vanish very quickly and you won't be able to notice it at all. So the window of opportunity is opening for a shorter period of time and you have to capitalize in between and not taking it for the longer period of time because it's temporary. As soon as the banks will become aware of the differences in the bank codes, they might change it, they might align their codes, or the equilibrium might align the changes. So you have to be quick and you cannot take a risk of delaying it for a longer period of time. Now, having said that, let's see that how we can locationally arbitrage. I have put a series of steps that one should follow to earn an arbitrage. So let's see them. Now, steps you do to earn a locational arbitrage with the locally banks available in your town. How you can do? First, you start with currency A. You have currency A and B. Suppose you have two currencies involved. So you start with currency A that you have on your hand. You go to the bank and get it converted to currency B. But before doing that, you have to do a little research work. You have to see that which bank is offering the rate which is low for the same currency and which bank is offering a high rate for the same currency. So the strategy that you will follow will be surely that you will sell to a bank offering a maximum rate and definitely will buy currency from the bank which is offering you the lowest rate. So you buy low and sell high. That's the strategy of locational arbitrage. So after having the currency B on your hand, you go to a bank which is offering a high price for the currency that you have on your hand. Simply you sell it and you get it converted to your currency A that was initially present on your hand. So the strategy is here, you sold high but you bought at less price and the difference becomes your profit. It's that simple. it's called locational arbitrage. It's local, it's within your town. You research the banks, you find the codes, and you immediately go and do the game. Now we are coming to the second type of the arbitrage, which is called as triangular arbitrage. So as its name suggests, triangular, you must be having some clues about the word, because it is involving three currencies that are going to be bought and sold at one time. So let's first learn about what triangular arbitrage is. As I told you that it involves three currencies. So you take the advantage of mispricing of currencies in forex market simply because it's mispricing, either it's undervalued or overvalued of the overvaluation of the currency. So you just go and take the benefit of the currencies. But unlike in locational arbitrage, where you were just taking the price of one currency and the other to get it exchanged, here the role play is of the cross rates, because there will be two currencies that won't be US based. So all the game is about them, either reason to create a profit or no profit. Anyway, so let me tell you about the cross rate. That cross rate currencies are the ones that are not US dollar, not in US dollars. Simply take the example of Pakistani rupee and Indian rupee, Mexican peso and Kuwaiti dinar. Take any currency of the world, but which is not in US dollars. So when we are trying to find out the rate of Pakistani rupee in terms of Indian rupee, so that becomes a cross exchange rate. When you are trying to find out the price of PKR in terms of INR, it is cross rate. It is not a US pair, because you won't see US dollar involving over here. Now, having said that, we have to pick a strategy for triangular arbitrage as well as we did in locational arbitrage. So the strategy looks quite simple. Let's see. You start with currency A that you have on your hand, like either it's Pakistani rupee or dollar or or Mexican peso. The rule of thumb is that for arbitraging, the currency that you have on your hand, you start with the currency on your hand that you have, and you end up with the currency that you initially had on your hand. That is the only way to earn it. So definitely whatever the currency you have on your hand, you start with it, you convert it to currency B. Now you have B on your hand. Again, you go to the bank, some other bank, you convert currency B to currency C by selling it and buying currency C. Now you have currency C on your hand. So in last, what you do, you sell currency C at a big rate and buy currency A. So always in this all cycle, your motivation, your determination is always based on buying low and selling it high. This will be your motivation. So this is the strategy of how triangular arbitrage works. So let's see an example for earning of triangular arbitrage and finding out that if it is possible or not, in what situation it becomes possible and in what situations it is not possible. So here we are available with the data. We have pound per US dollar. So always one currency is a base currency and other currency is a quoted currency, as explained in the slides of in the video of currency appreciation and depreciation. So always the second currency tells us the amount it takes to buy the first currency, the base currency. So it says 1.30. This is the current rate that I have taken for you. So it says $1.30 to buy 1 pound. This is rate of US dollar. The other currencies that are involved here are Great Britain pound per PKR, and the cross exchange rate is 242.82 rupees. This is the amount of Pakistani rupees it takes to buy 1 Great Britain pound. As I told you that consider this GBP as a good or some item that we are buying from the market, so we have to pay in an amount to buy it. So this is 1 unit price of pound in terms of PKR. And then we have PKR per US dollar. Again, we will buy pound by selling US dollar. Now we have pound, we will sell the pound and buy Pakistani rupee, and then we will sell Pakistani rupee and buy US dollar again. So the rate of buying US dollar by selling Pakistani rupee is 0.0054, quite low, but this is the data we are available, and this is the current data of today. And now if you have $10,000 available, if you have $10,000 available, is triangular arbitrage possible? We have to find it out, and we have to also calculate, if it is possible, then we have to calculate a profit that we can generate from the triangular arbitrage.